Please welcome Matt Bennett.
All right, good morning. Everything I say in the next hour is going to be probably outdated by about 11:01, okay? But if you hear me talk, typically, I'm going to tell you things like, this report shouldn't be the end-all be-all, right? This report shouldn't define what kind of year we have. How many times have we seen a January report trade up the limit or down the limit in the past? And I'm not asking for an exact answer, but a lot. So the volatility here in about an hour and a half or so probably is going to be pretty dadgum strong, okay? And so, you know, they were talking on that video about we're handling a lot more money these days. Well, how much more money are we handling in 2022 than we did in 21? We're talking about the USDA, so I'm going to bring out my favorite slide of all time. When I die, I want the USDA to lower my coffin so they can let me down one last time. Anybody ever felt this way? How many years in a row did we not get a bullish report? I mean, it was from 2015 through 2019, 2020. We couldn't catch a bullish report to save our life, right? And then all of a sudden, I'll tell you what, last fall, things started to change significantly. And I'm talking like the fall of 20. We started to realize that I think we'd really messed up the 2019 crop. There was a lot of things going on that the USDA was having to try to backtrack just a little bit. Now, I'm not up here to pick on them because how many of us, for instance, let's say as of August the 1st on a typical year, how many of you guys can guess your yield within 5 or 10 bushel? Okay, but how bad do we beat up the USDA for not getting it right on 90 million acres? All right, and so I'm not beating them up. I'm just saying we missed the boat in 2019, and several of us in the industry felt pretty confident that there was some stuff wrong with the numbers, and those did come to pass. So I am going to start out by saying, on a big picture level, how much has my net income increased over the last couple growing seasons? What was 2021 like in the grand scheme of things? Anybody in here care to say that 21 was the best income year you ever saw in your career? Because I've had multiple people tell me that that's going to be the case, okay? With farm income rising, am I going to adjust my lifestyle, right? How many of us in 2007 to 2008 up through about 2013 had a lifestyle that was a little different than it was in 2016, 17, and 18, and 19? Anybody? Because we had to, correct or incorrect? I mean, how bad were times 2015 through 2019 compared to the previous years? I mean, you were looking at all-time record profitability, and so we had to make adjustments, all right? We all had to make some adjustments. And so this year, you know, we're just not very far removed from some pretty tough sailing. And I'm going to go into detail on that later on, but we had some pretty rough times going into the 2020 harvest time frame. It wasn't that long ago. Have I evaluated my profitability when making acreage decisions for 22? There are some acres still out there in the mix. And so I'll tell you what, we need to be paying close attention, because how many of us were able to book most of our inputs at prepay prices? A few? Okay. How many of us wish that we would have booked all of our inputs at prepay prices? What's the difference between prepay and spot prices? Today, currently, if it's a 250 and 250 DAP and potash program with 200 pounds of anhydrous, actual in, you're talking $150 an acre between prepay prices and spot prices. $150 an acre. And so obviously that has to factor into some decisions as we start to evaluate what we're going to do this year if we're not already locked in. Then what's the best use of additional income? And that factors in as well. So how many of us in the last 30 days have made the comment or heard someone make the comment, man, I got to get rid of some money? Has anybody heard that comment? You guys are a bunch of freaking liars, I'll tell you that right now. You guys are lying to me right now. And I'm not trying to pick on anybody, but guys, going into the fall of 2020, we didn't know if we were going to have the 6th year in a row of barely scraping by, correct? Here we are 15, 16 months later, and we're already saying, oh gosh, we got to get rid of some money, right? Times are that good. Well, guys, times are better. There's no question about it. Price summary in December. It was interesting to me to see that the corn price projection for cash corn was $5.45. Soybeans was $12.10. You can see some of the other ones on there. It's pretty interesting. You see, for instance, fat cattle at $135, which we've been trading in the low 140s. And so there's a lot of things that have actually crept up, but the cash price of corn is one of them. And so $5.45 is what their projection was at this time, and most bids around, especially at processors, are $6 and over. So your production summary. That is essentially going to tell you a couple of different things. Last year we raised corn 951 million bushels in production over the previous year. 951 million bushels. So if I would have been sitting here a year ago and said, hey, guess what? We're going to raise a billion bushel bigger crop, and you're going to see another rally of about $1.20 on the corn market. You would have told your farm credit people, don't have that clown back. He doesn't know what he's talking about, right? But how many times in your career have you seen a billion bushel bigger crop, and then you get a rally in the market, and guess what? Hot basis. How many times have you seen that? Anybody ever seen it before? I've not seen it before. It's incredible. You look at soybeans, 200 million bushels larger. Now, what's the USDA going to say? That's what everyone wants to know. I got no idea, but I can tell you this. Basis levels are on fire right now in certain areas. And so CIF values, whenever I say CIF, I mean what is a barge worth in New Orleans? Today are running well over $1 a bushel over the board. And that's about 15 to 20 cents higher than it was a week ago. So what does that tell me? It tells me we're doing some business, okay? Also, there's no question, crude oil market is kind of caught up again. And we're trading over $80 crude. I don't know where we're at the current time. I didn't even look. I was too busy looking at corn and beans, but we were $81 yesterday. But I'll tell you what, something's going on whenever these values continue to race like they do. How many times have you been sitting here in the month of January and you've heard people talking about a push for bushels after you just raised a record yield crop? Again, guys, this is not typical stuff. So we already talked about USDA today. We've talked about what policy looks like. What does current U.S. fiscal policy look like? I think it's something like this. I don't know how much money we can throw out, but we've thrown some money out over the last couple of years. What's inflation look like? We keep talking about inflation. Yes, inflation is certainly ramped up, but what does it look like in comparison to the past? Are we going to see hyperinflation? I certainly think that we could, but we certainly are not at that level just yet at the end of 21. But whenever you look, the black line here is the European Union's consumer price index versus the U.S. And a lot of times what you see is that the EU leads the way higher. And later on, our consumer price index will follow. Is that something we're going to see? I don't know. But whenever you look, for instance, at interest rates, what do we typically do to curb inflation? We raise interest rates. That's just what we typically do. I'm not saying that's what we're going to do. I've heard a lot of people say, well, the Fed cannot raise rates because it's going to cripple the U.S. economy. You know what? I don't know if I can say that. I mean, you know what? You can sit here and tell me that they're not going to do four rate increases this year, but that is what they're currently projecting. And so if they continue to look down this path, I don't know whether they will or they won't, but you have to be prepared. And that's why I talk about what are you going to do with your additional income? Now, how many of you guys really like paying income tax? I know, you don't, right? I understand that. But how many of us have seen in the last several years strategies to avoid paying personal income tax backfiring on us later on? Because if we buy equipment to avoid paying income tax, and we buy that equipment with the presumption that we're going to continue to see the kind of profit margins that we currently see, and then all of a sudden the rug gets pulled out from under us, how does that purchase look like whenever you've still got 4 payments to make? You know what I'm saying? I mean, guys, we got to be super careful here. We got to be cautious. That's what the U.S. dollar chart looks like, and you say, well, this dollar has to have topped out. This is a daily chart, and you're right. When you look over the last several months, it certainly looks like we may have topped out. Yesterday was actually, for those of you, how many of you guys would love to see the dollar plummet? I would. I'll tell you that. Because typically when the dollar plummets, what do you see happen? you're going to see our products cheaper on the world market. I'm not saying exports are going to race higher, but there's no doubt that we become more competitive. Why have the Brazilians been so competitive over the years? Because the real is, it just plummets at times. All right, at times. And so, yes, the dollar looks like it could have topped out, but let's look at it on actually a monthly chart. And guys, we're a long ways from where we were just in 2020, okay? So I'm not sure that the dollar is going to plummet. My personal opinion is, as we continue to print money and we continue to throw money out there, what should happen? I mean, the dollar should go down, right? Because simple supply and demand. But here's what I'm going to say. You know what? A lot of folks in the world looking to invest in some sort of a currency, they're looking at the U.S. dollar as the ugliest or best looking ugly person in the room, okay? You know what I'm saying? Because there's a lot of bad situations out there, but the U.S. seems to be stable, okay? Now, I don't know what they're basing that on. I don't know. But, I mean, obviously, we've got some issues, but we don't have issues like some other folks do in the world, okay? And that's the reason why I think the dollar's been supported. World corn supply and use. This will be updated today, but I think it's interesting to see beginning stocks at 306. 2 marketing years later, you're looking at essentially the same stocks, okay? Now, why is this important? You know, because you look at beginning stocks this past year at 292, you know, and then you're looking at this year at 305. Basically, we built stocks by a fair margin, but that's with the assumption that we're going to see normal type production here in the U.S. this year. It remains to be seen if that's going to be the case. World corn production, up 85 million metric tons. This is based upon the assumption that Brazil's going to have a much bigger crop. Now, a lot of you guys might say, well, there's no guarantees there, but typically the Brazilian crop does not perform as poorly as it did last year. Why did the Brazilian crop perform so poorly last year? For one thing, it got put in the ground late. And so if you heard me talk a year ago, I was just beating the drum, especially a year ago in the fall. I said that bean crop is going in the ground late. This is important because when the bean crop goes in the ground late, it gets harvested late. And the safrinha crop needs to be planted in a timely fashion, okay? So Eric's going to tell you more about the South American weather situation, I assume, but here's what I'm going to say. If the northern part of Brazil stays wet, there are going to be some double crop acres. That's not where the bulk of their double crop acres are at, but there are going to be some acres that could go into the ground a little bit late. It's going to be very important to watch, but you've got to make the assumption that world production is going to go up. U.S. supply and demand. 1.493 is your ending stocks. What do I expect for today? I think the yield will get scaled back just a shade, okay? Now, USDA reports are very complicated things because especially today, you've got yield, final yield for the U.S., you've got ending stocks based upon what demand projections are going to be. What do they think is going to happen with ethanol, livestock usage of corn, ethanol, and then exports, okay? But the other thing we're going to see today is what do quarterly stocks look like, okay? So quarterly stocks are going to be released at the same time. We're going to look at South American weather. I think the USDA needs to adjust the yield just a little bit lower based upon a lot of the issues we had from here east. The Eastern Corn Belt had a lot of production issues due to an excessively wet time period and then following it up with some dry times. And what's the basis doing in the Eastern Corn Belt? It's literally on fire. And that tells me that there's not as much corn out there as what originators want to see. And so my personal opinion is that the yield should come down. Last year we got a big surprise and it really came down. Last year we were still early enough in the game. They did not know what Brazilian production was going to look like, first of all. Second of all, this year there's a lot of estimates that corn production in Brazil and Argentina are going to be lower, at least some. Nothing remarkable just yet. So I'm afraid if I was going to handicap this report, I would say that production won't change significantly, but it sure needs to come down in my opinion. I think stocks need to come down, but I'm sure not going to be carrying a long position in the report because of these things, okay? What I think you need to do, if we haven't been paying very close attention, we've had a ton of opportunities on both old crop and new crop. This report could change the game, at least somewhat. That's what my supply and demand balance sheet looks like. My official estimate was 176.8. It's the fourth column from the left. Most of you won't be able to see it. This ends up translating to ending stocks of 1.424 billion bushels. So that brings stocks down 60 to 70 from last report for the USDA, which was the same in November and December. I carry that into this next year with 90 million acres planted and a normal amount harvested. And if you see a 178 yield this next year, which would be a bushel better than what the USDA is saying we had this year, which 177 was an all-time record. If you have an all-time record 178 yield using current demand projections, you're looking at a 1.169 billion bushel carryout. Okay? Now, what is going to happen though if we take the price of corn even higher yet? What should we assume is going to happen? Demand should get curbed somewhat. So obviously this is a moving target. We put these together and we save them every single month to go back and look and see how everything turned out. But I can tell you, we were doing this in 2019, and the projections we made in 2019 look way more bullish than what they possibly should have to a lot of folks in the industry. But guess what happened? At the end of the 2019 marketing year, the USDA dropped stocks 300 million bushels in the September stocks report. 2 years in a row they did that. And that was all based on 2019. When we went back and looked at our 2019 numbers, we're actually very close. We felt like in 2019, the wet weather was going to impact production a heck of a lot more than what the USDA thought. And I got to think that we ended up being right. But I can tell you, a 182 yield's still only going to bring you 1.5 billion bushels. Now, again, if you end up ratcheting this thing, maybe you plant 93. What do you guys think for acres this year? Anybody think that we're going to have 93 million acres this year? 92. Okay, how many of you guys think that we're going to see 90 to 92 million acres this year? I mean, that's what I think. Does anybody think we're going to have below 90 million acres? It's possible, but I'm not sure. Here's the thing I can tell you. Someone who has not made the decision yet, if it's not really high production, you're looking at the cost to put a crop out needs to have really good production type acres. And so what I've been saying, my dad's got some bottom ground over by Lake Shelbyville. And we talked about it the other day, and he said, I could go back to corn this year, but bottom ground typically isn't the type of ground that you put anhydrous on in the fall, right? So he's going to have to pay $15.50 for his anhydrous. His fertilizer costs, he could probably skimp a little bit this year, if we're honest about it, and try to recuperate it later. But bottom line is this, if you're going to put $800 or $900 an acre into something that you own and is paid for, or whatever the price might end up being, you darn sure better hope that it's pretty good production farm ground. So I've got to think that corn and bean acres could be fairly close this year, unless you get a big rally from this point until springtime. When we look at Brazil, why do I talk about Brazil's safrinha crop all the time? The green is the safrinha crop. That's how much production. So the yellow is the first crop. Yes, Brazil's first crop corn was impacted, okay? And so the second crop, though, is the most important thing. Is it going to be impacted? Nobody really knows this yet. We look at Brazil's corn area harvested. You know, this continues to go up every year for obvious reasons. They continue to expand acreage. And so you're seeing more and more acres going to corn every year. They're making good money. Why not plant more corn? You look at production. The current estimate is 118 million bushels. Yesterday, CONAB came out and they projected, I believe, 114, so they backed it off a little bit. But bottom line is this. You're looking at production continuing to go higher. Which direction you think this is going to go in the future? I mean, they've still got a lot of ground that they can bring into production. So keep that in the back of your mind as we continue to make plans for the future. I think it's very interesting when you look at Brazil's corn yield and U.S. corn yield that we drastically outproduce Brazil at this stage of the game as far as production goes. And keep this in the back of your head because we'll look at what soybeans looks like here in just a little bit. But this is very important. I've always said I think that the U.S. grower, we love to plant corn, right? And so I think we're going to continue to plant corn, but there is something that's going to come into the discussion when we start talking about soybeans that could change the entire dynamics of what we're looking at here in the U.S., but the U.S. producer is still the number one producer. Now, China corn consumption, what does it look like? All right, so we talk about China all the time. The dotted line at the top, the blue dotted line is how much they're producing on a normal basis versus how much they're consuming. The red line at the bottom is the deficit that they're running. Why did they buy all the corn last year? Was it 100% because of phase one trade agreement? Or did we know that they were going to have to buy corn and we worked something out with them? I mean, you know, I don't want to talk politics. That's not much fun, as you guys know. But I can tell you, we'll leave that to Jeff. He said he's going to talk all about politics later. But what I'm going to tell you is this. The Chinese need corn, okay? And whenever the CIF values at the Gulf continue to race higher, and your export terminals, your river terminals, continue to post better basis levels, it tells me one thing. What it tells me is that the Chinese are probably in looking at more business. And so if that's the case, it's going to be friendly to the corn market. That's what your ethanol margins looked like before we finally took a dip right at the end of the year. Obviously, ethanol margins were fantastic. And so some folks asked me, I was asked the last time I was on Market to Market, why did the week before we see ethanol production, corn usage for ethanol go down? And here's why it went down: logistics. I mean, they couldn't get trucks, they couldn't get rail to get the ethanol out of there. And so if they're full of ethanol, how are they going to produce more? With these kind of margins, do you think that they wanted to produce less? I mean, absolutely not. These were all-time record profit margins. And so, you might say, well, does this spell good things for the industry in years ahead? Guys, I think we all know ethanol is a mature industry, okay? Are we still going to see it as a clean fuel that we can use? I believe so. I believe so. Electric vehicles will become a part of the discussion. We do know that. No, we all know that. But I think these people are working overtime to try to have clean-burning vehicles that run off petroleum still. And I fully believe that you're still going to see a fair amount of corn usage for ethanol in the mix. That's what your world and U.S. corn exports look like from 1960 all the way till now. If you notice, back in 1960, the U.S. was the world corn exporter. We are not anymore. All right? We've got several players in the game, whether it's Brazil, Argentina, Black Sea region. And so bottom line is, when we look at how it all stacks up, the green there is South American corn exports. They've actually been running ahead of us when you combine Brazil and Argentina, Paraguay, Uruguay, some of the smaller markets, when you throw them all in together. And so we've got to be cognizant of the fact that we're not the only game in town. Where does this come into play? Because whenever we think about smaller U.S. production, that's not going to mean that the market's got to go out of this world higher, right? We're looking at the situation that is not quite like wheat, where anybody can grow wheat in the world, but we're looking at more and more folks are growing corn than what used to, and they're putting it out on the world market. That's what your March corn chart looks like. Basically, you can see about two lines there, but there is a red line there, which is your 200-day moving average, or your 100-day moving average. The yellow is your 200. Essentially, we look pretty healthy as far as corn's concerned. If the market breaks and breaks hard and goes through some of these support levels, there's no doubt about it that you could see increased selling as this market continues to roll. But today's going to be interesting. I don't know what I would say other than I feel like it wouldn't surprise me. I'm just going to throw this out there. It wouldn't surprise me if we get some friendly numbers to take this market up the limit today. Okay? Is it going to stay up the limit? If we look at last year's reports, a couple of times when we went up the limit and stayed up the limit, we opened sharply higher on the overnight market, and then we turned the market around and went right back to the trading ranges we had been in. So if I were you and you're thinking about selling some corn, what does it hurt to put an offer out there? And I don't want you all to get up and leave. You've still got plenty of time before 11 o'clock. All right? But what does it hurt to put an offer out there? I mean, heck yes. You know what I've noticed here lately is that some people are calling their originator and saying, hey, you know what, I'd sell all my corn if you'd give me $6, and they're posting $5.85. And what's the originator say? Sold. 15 cents. And then the guy that's selling the corn says, I don't even know if I really want to do that now, right? Guys, I'm telling you, if you really want to sell some corn on a report day when there's extreme volatility possible, it's a great time to put an offer in. I'm talking old crop or new, all right? That's what your Dees chart looks like. Again, it's a pretty healthy looking chart. As you can see, we've just continued to go higher. How many times, I know input prices are higher, I know that, but how many times have we been sitting here for this long and seen 550 range-ish type corn available to us to be able to lock in? How many of you guys can make money, and gals, at 550 corn? 2 people. The rest of you need to work on your expenses just a little bit, okay? All right, I don't know what's going on around here, but 550 corn is profitable, especially at prepay fertilizer prices, If you don't know whether it is or not, we need to sit down and talk. Okay, I'm serious, because if you throw everything into a spreadsheet, it's very clear. It's very clear. You can start toying with your fertilizer prices. We'll do it in a little bit. Let's talk soybeans. 95 million tons coming into the 2-year window, 102 coming out of the 2-year window. This, of course, could be heavily impacted by what we see for production out of South America. But the bottom line is this. Why is the soybean market just raced higher over the last month? South America. I mean, that's all there is to it. So anytime you see Argentina have dry weather, what's the first thing that rallies? Soybean meal. Because 50% of the world's soybean meal typically is exported from Argentina at the least. Okay, what's going to happen, and we're going to talk a little bit about this renewable diesel story here in just a little bit, but what's going to happen, in my opinion, is that 50% argument for Argentina putting soybean meal out on the world market might not be the case 4 or 5 years from now. I really think that might be something from the past. That's what your supply and demand looks like, 340 million bushels. I don't have any big revisions, but I can tell you 7.8 stocks-to-use ratio for beans and 7.8 stocks-to-use ratio for corn are two completely different things. This last year, we basically ran to the bottom of the barrel. Okay, typically when you see corn stocks-to-use get 10% and under, which is where we're kind of residing right now, you get some sort of a demand rationing type rally. Okay, and so a lot of folks have called me over the last few months and say, why aren't we rallying? I said, because we already have. That doesn't mean that we can't rally more, but haven't we already rallied quite a bit? If we stop and look at the way this has all transpired. Whenever I look at my soybean supply and demand balance sheet, 348 is what we projected for this report, a slight uptick. We think that production actually was cut too much in November. We feel like that there's more beans available. When you look at the basis on beans, it's not as robust as what it is for corn. Whenever I carry that into this next year at 90 million acres, and you might say that's way too much, but I just threw 90 and 90 to start with. I could see it being 91.5 and 87. I don't know. But I can tell you this, at $13 beans, I think that there's a lot of folks that are going to actually push beans, especially in some of those marginal areas. I've got to think that it's going to be something they do. A 51.5 bushel yield, very similar to this year, gives you a 500 million bushels, but that's at 90 million acres. Okay, 90 would be the upside of my range on bean acres. Brazil, production continues to grow. 144 is what we originally projected. Most people projected. I believe Jeff said Conab was 140 yesterday. There are some folks that are 134, 135. It all depends on who you talk to. But the interesting thing that you've got going on in Brazil, I've been comparing it, and Eric might, he might agree or disagree with me here, but it's interesting to me to see that there's been a very stark contrast in Brazil between the haves and the have-nots on rain, and that there's been so much rain in the north and really big issues in the south. Now, they've gotten some clusters come through, but the drought monitor down there has been really interesting. And then when we look at the U.S., the western corn belt's dry as a bone, and then you get into the eastern corn belt, and you've got people with their tiles running nonstop. It's very similar whenever you talk about the comparison between the two. But that's what your production looks like in Brazil. Look at Brazil and U.S. soybean yields, though. Neck and neck. It's a totally different story than what it is with corn. Okay, and so if we continue to see Brazil ramp up corn production, it's going most likely to be much more so due to expanded acres than what it is going to be what their ground is able to do, because they're planting good genetics already. Don't fool yourself. All right, they're trying to plant whatever they can to be able to make money. And the thing is that their yields don't have to be what our yields were. 2 years ago, I was at Farm Futures, and there was a panel from Brazil on that Max Armstrong was interviewing. And the largest farmer on the panel farmed 350,000 acres, okay? It's hard for us to fathom, I know. But Max said, what were your gross proceeds last year? And he said, 250 million. Max said, well, what we all want to know, though, is what was your profit margins? What was the percent on profit margins? He said 33%. How many of us have 33% profit margins? Now, you might have had that. If you own your ground, it's paid for in 2021. You very well might have. But how many of us have averaged 33% profit margins over the last few years? And I know nobody's going to raise their hand anyway, but I'm just telling you, I know that you shouldn't be raising your hand on that one, okay? But it's a different story. It's a totally different ballgame. That's where we ended up this last year, essentially at about bare bottom supplies for stocks to use ratio. If I look at crush margins, so whenever you take a soybean and you crush it for soybean oil and soybean meal, what have crush margins been over the last few months? As you can see, that looks pretty similar to what your corn ethanol margins look like. Crush margins have been fantastic. Why is this? Because folks are crushing beans not just for bean meal. They're crushing it for soybean oil as well. And when they're using soybean oil out in California for fuel, essentially, in this renewable diesel situation, guys, this is a growing monster that you should not ignore. Central Illinois. That's what your crush margins look like over the course of time. Look where we started in October, November, and December. Best of all time. Best crush margins of all time. So, if you look at, for instance, fossil diesel, annual emissions, 11.4 CO2, I don't know all the calculations, but whenever you start looking at renewable diesel, you're talking 2.9. I'm no math major, but that's less than a third, right? And so why is this such an important argument whenever we're talking about renewable diesel? The energy industry likes renewable diesel. They've never liked ethanol. They can produce more profit margin with renewable diesel than they could ever think about whenever it comes to ethanol. So why are they so up on it? Because of that reason. It all comes down to money. You know as well as I do. You look at this, okay? The projection out to 2024 for renewable diesel and jet production as far as fuel is concerned is this yellowish or beige dotted line. Obviously, it's going through the roof. And most of your projections are that we're going to need an extra 400 million bushels of soybeans by 2024. And you might say, well, I don't know if I want to buy into that. Guys, I'm talking about the plants that are either currently being put together now or that are in plans to be functional by 2024. Okay? And so if we're going to see renewable diesel this much better as far as emissions are concerned, and the government is going to push it, and the energy industry is going to push it, what do you think is going to happen? This is what's going to happen. So how many people have heard Dan Bossie from Ag Resource say we're going to need an extra 30 to 40 million acres of beans over the next few years? Because he said that. I'll tell you, Dan's a heck of a lot smarter than I am. And I'm telling you, I don't know that that's going to be the case. But what I can tell you is this. When we're sitting here a year from today with some of these plants coming online, the acreage discussion, or acreage battle, if you will, is going to be a different discussion than what we're experiencing today because of renewable diesel. Now, I'm not saying we're going to be significantly higher. There's going to be a tug of war for acres. A lot of our price direction, as you guys know, is going to depend on what 22 production looks like. That's what your soybean chart looks like. Obviously, we've ran up here just a little bit lately. We're essentially bordering on some of our shorter-term moving averages because we kind of fell back over the last 2 or 3 days. A lot of folks called me and said, I don't know what to think with these markets. I'm like, you know what? We have run so hard that a setback is something that you have to expect, especially going into a report. So which side of the ledger have a lot of people made money here lately? The long side. And so if you just made whatever, let's say you made $100,000 on the board, and you're going into the January report, do you think it's smart to let it all ride? No, I don't think so. Now, that doesn't mean that you're going to later on today say, man, I wish I'd have had that. But I'll tell you what, if you just made that kind of money on the board of trade and you're going into the January report with your you-know-what exposed, you need your head examined. Okay? You know what I'm saying? I mean, that's just the long and short of it. NOVE 22 soybean chart has been a boring, boring chart for several months. All right? We hung out at $12 forever. And then all of a sudden, we take this ride to $13, 20-something. And I had some folks step in, and they were selling some beans. Why? Because they were pushing up on $13 fall beans. And so I posed a question to Twitter. I said, you know, how many beans? Basically, it was what's it going to take to sell beans? What kind of price level is it going to take to sell beans? You know, and some folks were saying $13. And so I asked, how many of you have ever lost money selling $13 beans? You know, and so it's a question you have to ask because here's the thing. How many of us right now feel like we might sell if we get a little bit more of a rally? Anyone? How many of us don't make sales because we're afraid it's going to go up on this report or we're afraid it's going to go up tomorrow? Anybody ever like that? This guy's honest, so I appreciate his honesty. If I had something to give away, I'd give it to you. I just don't have anything, so I'm sorry. But, guys, listen. Our main marketing mistakes are based on two things, fear and greed. Okay? We're fearful the market's going to go on up. So if you're fearful the market's going to go on up and it gets you to not make a sale today, what are you going to do tomorrow? You might rally 20 cents tomorrow and you say, well, it worked for me yesterday. By gosh, I'm going to do it again today. Right? Or you say, you know what? I'm going to put an offer in to sell at the high from last Friday, because if we take it out and I can sell $13 beans out of the field next fall, I'm going to be happy as can be. All right? Because a lot of times, instead of focusing on what we've already gotten given to us, we focus on what we'd like to see happen. And that's a big problem. And that's where the greed comes in. How many people are greedy in here? If you got a heartbeat, you got an element of greed. I'm sorry. As we grow up and mature, right? That's one of the ways that we mature, is that we harness that. But if I tell Jeff I want to buy something off of him, mums, whatever it is, Jeff, you're just going to sell them to me cheap out of the goodness of your heart, right? No. And I say mums because he grows, how many mums you grow, Jeff? 8,500. 8,500. So if you're looking for mums this next year, get a hold of Jeff. He said you better book them now. Price is going up every day. All right, so impact of the rally. This, my friends, is the 1920 and then 2021 marketing year. So this is what I want to tell you happened. I'm going to show you this. Corn production from 19 and 20 to 20 and 21 went up 500 million bushels, and the bean production also went up 500 million bushels. All right? And then he went up another 1 billion bushels on this previous crop that we just had. And the bean market the bean crop went up another 200 million bushels. So how did this impact things? We went into August 4th. I just picked that date because it's my son's birthday. This was before the Duratio event. $3.05 at ADM Decatur. How easily we forget that this was the case going into harvest. 15 cents under the board. How many of us were going into fall of 2020 thinking, here we go again. This is frustrating, right? Okay? Where were we at yesterday? $6.01 on the board with a basis in January, mind you, of 12 cents over. And what did I just tell you? We raised corn production over the last 2 growing seasons, 1.4 billion bushels. This is not normal. It is not normal. And so if you tell me, well, I don't know if I want to sell corn, because of this, I'm perfectly fine with that. But I can tell you, you're playing with disaster. I'm not saying we won't go to all-time highs this summer. It's possible if production is adversely affected, okay? But if we have a normal production cycle, I feel pretty confidently, especially given your input costs, that you just rung the bell in a big way, selling $6 corn for the 2021 crop. All right, so keep in mind, this was not normal. Fertilizer prices. This was as of this past fall. I don't know what you guys are seeing for current DAP prices, but I was quoted $1,000 the other day. And I was quoted $8.80 for potash. Are you guys seeing similar prices? I mean, those are the prices I've seen for spot prices. Obviously, not all-time highs, but incredibly important. So the soybean corn ratio, as you can see, this green line got all the way down to the blue line. Where's the blue line? Just a shade over 2 to 1. And so before the bean market took off on this rally, essentially what the market was saying is that, you know what, this bean market's either going to have to rally big time or we're going to plant a lot of corn. We were trying to buy corn acres, if you will. And so a lot of folks told me, was it going to go below 2 to 1? I'll tell you what, there for a while I thought it was going to. But the bottom line is that the bean market said, you know what, with South American production, we're going to have to buy acres. We have to buy acres because we're putting ourselves in a position where if you end up with a major production cut, you're going to have a big issue. Now, I want to show you something. Ed Ussett from the University of Minnesota is a good buddy of mine. If you've ever gone to Commodity Classic, Ed and I present together every year on the early morning riser. Last year, we got to present virtually, but this slide caught my eye, okay? This slide says, these corn futures from 80 to 21, 13 years when the July to December inverse was greater than 5 cents on February 1st. Last year, it was greater than 5 cents on February 1st. Why is this important? Because Ed said, out of all of those years, out of 20-some years, there was only 1 year where you got into the fall and the price was higher than it was February 1st. What year was that? 2012. Is there anything different between 2012 and 2021? A historic drought versus all-time record U.S. corn yield. Could that be even any more polar opposite than what it is? But yet, what did we do? We rallied. We did exactly what the data told us shouldn't happen based upon all of this historical data. Guys, this has been a record-type move that most of us are blessed with that we shouldn't necessarily have received. Right? I mean, let's just be honest about it. Soybeans, very similar discussion. I mean, there was 2 different years, but it wasn't 2012 like I was talking before. It wasn't near as compelling as the corn situation, but it certainly was something to pay attention to. I always talk about meat just a little bit. How many of you folks remembered when we went into COVID, everyone said that beef prices were going to tank and they're not coming back anytime soon? Why was that? Restaurant demand, right? And you know what I've told people? I told Jeff this on the radio, I know more than once. Here's the thing. If my wife and I, we're going to go down to Top Producer Seminar here in a couple, 3 weeks. I got to go down there and present. We're going to go out and have a nice steak. What's that going to cost me? Probably $150 for a couple of steaks. You know, if you go to a nice steakhouse, correct? How many steaks can I buy and eat at home for $150? Now, granted, we raise our own beef. Okay, but why did beef demand not drop through? Because people said, you know what? We're doing life at home. I like grilling, and I'm going to buy more beef than what I did before. And so beef demand was extremely strong. And so I know if you don't produce cattle, you might not give a rat's rear end what I'm saying here, but this is what I'm going to tell you, is feed usage is something to pay very close attention to. Livestock numbers have been down, but they're continuing to try to build. Why would they try to build? Because profit margins have been robust. Okay, this is a really good thing for corn demand. People say, well, these beef prices are too high. Well, relatively speaking, I don't see any huge difference between beef, pork, and chicken. I mean, they're all going up, correct? I know they're different prices, but they're all going up. And so whenever I look at cattle on feed, they're down, at levels that aren't all-time records, but bottom line is this. I got to think cattle prices are going to be pretty strong. I just put a cattle chart in there for feeders and for fats, and what I'm going to say is this. I got to think this is a pretty healthy market where they're talking feeders or fats. Look at that fat cattle chart. I mean, that's the thing of beauty. I mean, it just continues to ratchet up, and I think what that shows you is building demand. So, profit margins should see risk management. This is something that you need to get your head wrapped around. Again, 2021, you put a cheap crop in the ground, and you saw the market rally throughout the year. 2022, you put an expensive crop in the ground, and right now the market is pretty darn good. Okay? Did anybody, I know you're probably not going to respond, but I wrote an article for Farm Futures. Okay? Year on year, there was a $1.10 rally in the price of corn, December 31st to December 31st, when we're talking March corn. If you saw the market go down $1.10, what is the swing in net income per acre year on year? $600 an acre. $600 an acre. So, if you don't think risk management in some form, I'm not saying you go out and hedge a bunch of corn on the board of trade. I'm saying you write an HTA at a profitable level. You put a floor under the market. I've had people tell me, I don't know how many times, I'm tired of buying puts, they expire worthless every time I do. I'm like, man, the market rallies every time you buy a put. You know what I'm saying? You buy a put to protect yourself from the downside. If the put expires worthless, what's happened to the market? It's either been the same or gone up. Put's a good investment, especially when you've got money on the table. And you've got more money on the table right now with this crop than what we've seen in many, many years. I think 22 could be explosive, but I certainly think we need action. We got to lock in as much profit as possible, but I still think the more aggressive we get, we've got to leave some room for upside if we end up seeing some sort of a problem with production. Because you might tell me, why don't I go to 50, 60% sold? I'll tell you what, a lot of folks, as the market rallied in 2012, started ratcheting up their percentages to unhealthy levels. And guess what? They didn't produce as much as they sold. Okay, so if you're going to get aggressive, I've got no issue with that, but make sure you've got flexibility in your marketing plan in the event that the market skyrockets. Because what's the amount of money that we've gone up due to inflation on corn and beans? I don't know that it is that great. I really don't. I really don't. Especially with the dollar and doing what we're doing, as we talked about. And so the last thing I'll say, a person can't go broke making a profit. All right? And so keep this in mind. Your profit margins on your 2022 crop are probably not going to be what they were on the 2021 crop. That's just the long and short of it. Highly unlikely. So quit trying to market like they're going to be. Okay? 2015 through 2019, your profit margins on the 22 crop right now, if you lock them in, are way better than those years were, if you at least employ some sort of risk management. And then if you want to shoot me an email, just take a screenshot of that. I'll be glad to talk to you about anything you want to talk about. And then I got one more slide, and then we're going to take some questions. But again, Jeff, as you know, the report should not necessitate everything we do. The last thing is my risk disclaimer, so you cannot hold me liable for anything I said this morning.
I'm going to read all that together. Okay, I'm going to ask this of you, and I'm curious, because we were talking about having $100,000 made on the board and not taking protection in front of the report today. So let's talk about exposure. If you've got grain in the bin that's unpriced, or you're making purchases right now at ungodly prices, how much coverage do you have on your operation for the checks that you're writing right now?
My company is 100% sold on 2021 beans. We repurchased or re-owned, if you will, with a call strategy, 33% of those beans back in the fall time frame out to July. That looks pretty darn good right now. But we only did a third. That was our official recommendation. Some of my customers did more. I always do what the recommendations are, because that's the way it works when you're making recommendations. You have to abide by your own recommendations. Before I started writing official stuff, one year my wife had read my newsletter, and she says, man, I'm so glad that you've sold so much corn. You know, and this was like 2 weeks after the market had started to fall. And I said, hey, let's talk about something else, you know. She's like, wait, you told everyone that reads your newsletter to sell corn, and you didn't sell corn. And I said, yeah, I thought it was going to go up just a little bit more. So, true story. Corn, we're 70% sold on corn for 2021. And this is going to be high hands-on type situation, Jeff. My thing is that if I've got the corn in the bin at home for me, it's worth a lot more than what it is at the elevator. And that's nothing against the elevator situation, but I can tell you, if you've got corn in the bin at home, it's worth a heck of a lot more than what it is at the elevator. So how many of you guys like free DP? Some of you do. Okay. The only problem I see with free DP is that right now I'm seeing some people push 15 and 20 cents for corn in the bin at home. And so once you've given up ownership of your corn, your bargaining power is gone. So be very cautious as to take too much of your corn in free DP. I totally understand the ease of it and having it to where you're not taking care of it. Totally get that. But if we're talking substantial amounts of bushels, I would keep corn in the bin at home still, if you're still going to hold on to it. Now, if you told me right now, Jeff, I want to go to 100% sold, I'm done with this, I'd say, good, you know. How can you go wrong selling $6 corn? You know, but how many of us think that the market could go back? I posted, and I know some of you guys don't do Twitter, I understand. I posted a poll to Twitter, what's it going to take to get your old corn out of your hands? And like 60 or 70% of the people said at least $7. Now, I don't know that we're going to see $7. One thing I can tell you is this. Basis is strong. There's an inverted market today, so there's no carry in the market. So what does that tell you the market's telling you? That the fact of the matter, this is a fact, they want your corn right now. That's a fact. Now, all those factors can tell me that my presumption is that they're going to want it a lot later right? But you're talking facts versus assumptions.
You know, I remember when we were talking about $8 beans and we said if we could get 10, we'd be happy. And then we got 10 and we sold, and then it went to 12 and we weren't happy anymore.
Right.
But there we are. I want to throw
Well,
this.
let me tell you 21 real quick.
Yes.
22. 50% on beans and 30% on corn is where we're at, okay? The 50% on beans, 30% of that position is a floor underneath us so we can let the upside run.
Okay.
Okay? When I get super aggressive, I don't want to quantify the upper end of it in too big a fashion, just in case I don't raise the bushels.
Well, since you're going to be here, I'm going to pull an audible that once we get that report and after we've had a chance to hear Eric, I'll bring you back in and we'll do a quick summary. We've got time for a couple of questions, and then we're going to take a break and come back in at 10:30. Here's the one I wanted to say, and I asked this question of some folks inside the renewable fuel industry. Where is the demand coming for next gen? Is it the fact that there is actually a person out there buying it that's bidding it up? Is it a federal mandate? And I knew the answer to that was no. This is not, I mean, we're fighting to get the EPA to administer the RFS right now. So where in the world is this demand coming from? It's coming from states.
Right.
It's coming from California. It's coming from Oregon. It's coming from individual states. And then I just can't help but ask the question, being the devil's advocate. Here, I bring up this guy's name, Pat Coombs. I was a president of a club, and any time that we were taking a vote, Pat always voted against it. And I said, Pat, why do you do that? He said, somebody's got to be able to tell you we're wrong. So, I mean, here's the contrary opinion out of it. What is this foundation? And what happens if all of a sudden California decides it's not a good idea anymore?
That's a really good question, but I can tell you there's going to be a lot of people on the wrong side of some serious investments if that's the case. So the thing about renewable diesel...
You mean like ethanol?
Renewable diesel that you need to understand is that you can use corn oil or soybean oil, okay? Preferred method is soybean oil, but the airline industry is the biggest
That's right.
proponent of renewable diesel, because the airline industry is sitting around here saying, oh, you know, whenever some of your politicians say that cow flatulence is the problem with the, you know, the world's environment, other people are saying, what about airline fuel? What about all these planes in the air constantly? And so these airline industries have all committed to a zero emissions type situation within the next 5 to 10 years. The only way they're going to do that is with this sort of fuel.
They're making promises that they don't have any definitive answer, but they're making the promise and trying to figure a way to fulfill it. And right now, it's the cat's meow and the golden goose in D.C. We got about a couple of minutes here for Matt. Anybody question before we go to break?
Go ahead.
Or you want to? 23 crop question.
We just, that's a great question, and I like your thinking. We just sold up to 10% at 5 1/4 and 12 1/4. I mean, why not? You know, and you say, well, what about fertilizer prices? We don't know what they're going to do. Well, we're doing 10%. Historically speaking, 5 1/4 and 12 1/4 are extremely good prices. And so I am a big fan of incrementally selling at profitable levels. And for 95% of the operations I work with, we can make a case today that we can make money at those profit levels. And so those price levels. And so great question. And let me go a step further. Back in 2012, my mentor, if any of you guys know me very well, is Dr. Good. He's a great, one of the best ag economists ever. And he told me, I called him one day because I was still in the grain business in 2012, working for Total Grain Marketing. And a guy called me one to sell 50,000 bushels for 13, 14, and 15 on a different type of contract. It's like one of those double up features, okay? But regardless, it got me to thinking, well, maybe I should be. Because I looked at these price levels, I'm like, man, this is a no-brainer. And he said, you know what, when you're making all-time highs, it's a really smart idea to make multi-year sales. So if we do make all-time highs this summer, or if we do run up to multi-year highs, multi-year sales make a heck of a lot of sense. But I do like your thinking. I don't have any problem with selling some stuff right now for 23.
Anybody else?
True hedge.
Sir. Yes, sir.
Matt, you said that corn in the bin was worth a lot more. When you say a lot more, give us a range.
Corn in the bin, how much more is it worth?
Okay, so I had a producer that called the elevator I was just talking about that I used to work for this week, okay, and their posted bid was like 586 or 7. And he called and talked to the guy he needed to talk to and said, I've got 75,000 bushels of corn at home still. And he said, I'll tell you what, I would sell it all to you if you'd push the bid. And he said, would you take 601, 15-cent push? He said, sure. And so I asked him, I said, do you have any corn in their bin? He said, yeah. And he said, I asked him what he would do on it. He said, 586. So 15 cents, 20 cents, I've seen even more than that. And one thing I'll tell you is that whenever you're in a situation, one thing I'd be a little bit careful about, like for instance with an HTA, is that you're locking yourself into that location. And especially if you're looking at holding on to cash longer, there's a lot of folks that would haul into, for instance, ADM Decatur that typically don't because they don't want to haul in the fall because they can't keep up, right? But in the summer, there's times whenever they'll say, hey, if you can haul over the weekend, we'll give you 30 cents a bushel. Now, is that a posted bid? No. But that's why you got to have a really good relationship with as many as originators as what you can. Let them know what you've got and let them know what you want. And don't be surprised if you put an offer out, you better be serious about selling it.